Hey, family. This is Sean Carter, and I'm just speaking today um,
Congratulations.
concerning information I'd just like to share with you guys. And what I remember my family. We were headed to the movie theater, just my wife and my kid, and I saw my dentist, and it was like, "Hey, man, how you doing?" I saw him at a ticket booth. We just chatted up for a little while, and then I went on into the dentist. Of course, he had his family because it's a great family movie. I'm not going to tell you what movie it was, but also then I saw my doctor and I spoke to him, and he had his family and his young child, and I'm like, hey, this is great, man. Everybody must be coming out here for movie night. We all got my stuff in the concession stand. The movie started. I could see, by that time it was getting dark. All of a sudden, there was smoke in the movie theater. So what I did, the first thing I did, I got up and I ran to my dentist and his family, and I'm like, hey, come on, get up, come on, let's go. Let's get out of here. And then I came back and went in and got my doctor, and I said, hey, get your family, get your wife and everything, and run on. Let's get this out of the let's get out of here because it looked like there's a fire. And after that, then I ran up and got my family and said, hey, let's go. Let's run. Let's get out of here. There's a fire. There's a smoke. Now you heard that story and you're thinking like, what? Why didn't I get my family first? Why did I not grab my family first? But every day we make that same decision all the time. By doing what? Paying other bills first, not taking care of our family. So today, we're just talking about a topic most people avoid, like a dentist appointment with no anesthesia:
You won.
life insurance, especially term versus whole life, and how to pick the one that actually makes sense for your life. Hey, and look, if you ever felt confused about life insurance, you're not alone. The industry has a talent for making the simple ideas sound like a NASA launch. Today, we're bringing it back to earth. Guess what? Here's the truth. Life insurance is not about death. It is about love, responsibility, and not leaving your family with a financial mess. So let's get to it. Let's understand what we need to. First, the number one real job of life insurance and why, people mess up with this. Let me give you a quick picture of what is needed, okay? If you have people who depend on you, your income, like spouse, kids, parents, a business partner, then you already have a job. That job is to make sure your people are okay, even if you're not here. Life insurance is basically income replacement. Literally just income replacement. It can also pay everything off that you're indebted to. The example we all know, like a mortgage, car notes, credit cards, medical bills, funeral expenses, kids' education, business debt, and so on and so on. In plain English, life insurance is a financial seatbelt. You don't buy it because you just plan to crash. You buy it because crash happens every day. And and I know, talking about this stuff feels uncomfortable. But so does GoFundMe accounts and all this other stuff that we use when some tragedy hit. I'd rather you not make your family pass the head around. Number two, the two big buckets, term and whole life. Most people choices come down to two categories. Like a term life insurance. Coverage for a set period of time, that's because it's term, is like 10 years, 20 years, 30 years. So if you pass during that term, it pays out. However, If you outlive that term, coverage ends, and unless you renew or usually pay out a higher cost because now you're older, it costs more money. Now B, whole life insurance. It is what it is. Covers you for your whole entire life as long as you keep paying it. It builds cash value over time, and it typically costs more than term insurance. So that's it. Those are the two big buckets that you're looking at. Now let's go deeper without getting, too weird. 3, term life insurance, the big coverage for less money option. Think of term like renting coverage. You rent protection for a certain number of years. Like if your house or your mortgage 30 years, you get the term insurance for 30 years. But what term is good for? Term usually is best when you're raising kids and you have a mortgage, or you're trying to build a career and you're just trying to protect your family when you need a lot of coverage on a budget. That's what term life is for. Okay? And here's a simple example. Story time. Let's say you're 35 years old, married, 2 kids, mortgage, and you're the main breadwinner. If something happens to you tomorrow, your family still has the same bills, but your paycheck disappears. That's a problem. A 20 or 30-year term can cover those years your family needs you the most, replacing your income. It's like saying for the next couple of decades, if I'm gone, my family is financially protected. And the pros of the term insurance, the real ones, it's affordable. Usually the cheapest way to get the big coverage. Simple. Death benefit protection. Straightforward. It's also flexible. You can match term to your biggest responsibilities. And back to the cons of terms, which is also real. It expires. If you outlive it, it ends. Renewing it can get expensive, especially later in life. No cash value. It's protections only, which is not a big thing, but it's just a fact. No cash value. Here's the blunt way to say it. Term is like car insurance. You're not mad it didn't pay you back because you didn't crash. You're grateful that you're covered. And one thing also, number 4, the whole life insurance. The life is a lifetime coverage plus cash value option. Whole life is more like owning the coverage. It's permanent, meaning it stays in place for life. If funded properly, it will be there. You have the cash value to work with. That whole life builds something called cash value. That's money inside the policy that can grow over time. Some people use it as a long-term financial tool, if they finance it right. What whole life is good for is exactly it. Whole life can be a fit when you want coverage that never expires. You want to plan for your final expenses. You want a policy that builds cash value. You have a special needs for your dependents. You're thinking about the legacy, the estate planning, or leaving money behind on purpose. You're a business owner and you need permanent solutions. The pros of whole life is, the real advantages are, it's lifetime coverage. As long as the premiums are paid, cash value grow, bills over time, hey, it's predictable. Premiums are typically leveled out. They're the same. Also, it can support a legacy plan, like leaving money behind intentionally. The cons of whole life is the stuff people don't say clearly, more expensive. You pay more for permanent coverage, cash value. Hey, it takes time. Cash value is not usually impressive early on you, but not one size fit all. Some people buy it with term would have been smarter. However, here's the honest analogy. Whole life is like buying a house Term is like renting an apartment. Neither is good or bad. What matters is, what do you need? What can you afford comfortable at this time? Because if the premium hurts every month, the plan won't last. And that's right, a council policy protects exactly who? Nobody. Number 5, the biggest myth, whole life is a scam versus term is throwing money away. Let's clean that up right away. On the internet, that is nonsense. Number 1 myth, whole life is a scam. Nope, whole life is a tool. It can be useful when it matches your goal and fits your budget. Term is not throwing your money away. Nope. Term is pure protection. If you never use it, that means you live. Congrats. You won. You lived the term. Number 3 myth, I'm young, I could get it later. That's like I'm buying a parachute later after I'm already falling. Life insurance is usually cheapest when you're younger and healthier. Waiting can cost you more or actually disqualify you. All depends what medicine or meds you're on. So which one should you get? Here's a simple decision framework. And I'm going to give you a no BS way to choose. Ask, who is counting on my income? If the answer is anyone, you need coverage. That's right. Who's counting on my income? The answer is anyone, you need coverage. Step 2, ask, how long do they need me? Kids growing up, that's usually 20 to 30 years. Mortgage, that's often 15 to 30 years. That's that term. Business debt also depends on your obligations, So if the need is temporary, the term often makes sense. Number 3, ask, do I need coverage that never expires? Do I need coverage that never expires? If you want coverage for final expense, no matter when you pass, legacy planning, permanent protection for a dependent, then whole life might make sense. Step 4, ask, what can I pay for comfortably? This is the part people ignore. The best policy is one that you keep. If your budget is tight, you may be better off with a strong term policy first and then later add a permanent coverage if you need it. Yep, here it is, the truth bomb. For many families, a smart plan looks just like term for big coverage, whole life for permanent needs for like final expense, or a mix depending on your goals. The common mistake I see all the time, mistake number 1, choosing a policy with the wrong coverage amount. Rule of thumb, many families start around 10 to 12 times their income, then adjust for debts and goals. Mistake number 2, buying the cheapest option without understanding it. Cheap is great until it doesn't do what you need it to do. Mistake number 3, naming the wrong beneficiary or never updating it. You know we always have life changes, like divorce happens, kids are born. Update your beneficiaries. Mistake 4, waiting until later. Later is expensive. Later is risky. Later is when health surprises show up. Now you're sick. Mistake number 5, treating life insurance like an investment debt. It is not a debt. Life insurance is first about protection. If it fits, you can use certain policy strategies for that protection. 8, wrap up. The 1-minute summary, all right, here it is the quick takeaway from this. Term life equals affordable, big coverage for a set time. Whole life, a permanent coverage plus cash value. Higher cost, long-term tool. The best one depends on your goals, timeline, and budget. Most important, get something in place if people depend on you, because If you don't decide, life will decide for you. And if life, you know it, it is not known for asking permission about anything. So, if you want help choosing between term or life, I just use this as a simple thing. Just reach out, give me a call, 813-723-1450. Visit me, hit me on the website. That'll be all in my notes there. So please give me a call. I will be able to help you with no problem. And thank you for listening to me.